We are working on a new advanced training um, series of videos covering nuances. As you appreciate in any skilled profession, whether it be athletics or trading, it's one thing to learn the basics and the foundation. The real differences come in when you start to understand all the surrounding nuances. The nuances we are currently working on are liquidation breaks. Following this, we'll work on short covering rallies, but right now, liquidation breaks. A liquidation break is the liquidation of current inventory. It is not a combination of liquidation and new money selling. It is predominantly just the liquidation of existing inventory. We have spent 2 videos already talking about liquidation. We are now looking at the 22nd of February, Friday the 22nd, and we're going to show you another form of liquidation. In the prior liquidation, it happened late in the day, and we said that with that kind of liquidation, the odds were good that on the following session, either late that session or the following one, the market would return back to the highs, the point from which the liquidation started from. The liquidation we're going to show you from Friday, February 22nd, it's a different kind of liquidation. It's a liquidation where the market totally recovers fairly quickly following the liquidation. We're going to start off, and Jen's going to play this, and we're going to start off playing at 10 times the speed. We come in as the day starts, and we know that overnight inventory is long. If overnight inventory is long and it's not corrected, we have a market that's fairly strong. The overnight situation we're looking at right now is a double distribution. And when we see double distributions, we work each distribution as a separate trade from overnight. So currently, overnight inventory is long. We are still in the upper distribution, and the market is playing at 10 times. So when you open within the overnight range and stay in there for a while, the chances are there's going to be some confusion, and that confusion is going to bring you early morning chop. And that's what we're getting right now. We're above the previous day's high. We've come back in it a little bit a couple of times, but we're in the overnight range. And remember, all inventories, not all inventories, all directions remain higher. The monthly bar, the daily bar, the weekly bar. So once again, the market broke down, and we're still in the upper range. All right, let's go ahead. The chances are pretty good we're going to have higher value today, unless the market breaks down, really hard. Let's speed it up to about 20 times the normal speed. So we've gone down to just a tick or two below half back from overnight. So what you want to do is record that as a week low. Again, attention to detail is very important. So when we look at that, we don't have a strong low when it comes from, almost exactly half back. When it comes from those mechanical levels, the odds are very good that the traders we're dealing with today are the shortest and weakest of time frame traders. In this case, probably very late momentum traders. Okay, so the market is playing at 20 times normal speed. We've just changed time periods, and you can see that the upside objective is going to be the overnight high. Whether we get there or not, we don't know, but that's what it's looking for. So when we look right now, we know that the A period low is questionable because of how close it is to the overnight half back. Value is building higher. We can see we are clearly above value from Thursday. So the odds are that value is going to be clearly higher today. Doesn't have to be, but that's also very important to keep in mind. Value is a great filter to have some perspective of what is really going on within the market. Yes, the market will rotate back and forth multiple times, but the value is a great filter. Now, notice that the B period high is just a couple of ticks from the overnight high. We had some single print selling. And if this market really does anything meaningful on the upside, it will more than likely go after that single print selling. So you'll see anything above that high was the single prints late in the session. All right, so the market, still a lot of rotation. The C period low went right down to half back. Again, we're about an hour and a half or so into the day, but a lot of chop and a very low confidence market. In a low confidence market, the odds are higher that you will get liquidation breaks. Okay, let's speed it up to about 30 times. So you can see we're playing this at quite a speed. But the point is we want you later on to see the liquidation. Okay, so C period goes up just short of the overnight high. C period low is also at the half back, okay? So now the market has rallied to the upside. As we said, the 220 high would be a very logical destination for this market to be aiming for. Value is higher. Remember, all trends are to the upside. So the market is just doing what it's been doing for some period of time. But what I want you to carry forward as we go on through this session is that we have not seen any great signs of strength. Yes, we're seeing higher value, but remember our lows and our highs have all been almost all at very mechanical references. We are one time framing higher. Now C period took out B by a single print, but that doesn't stop one time framing. Okay, the market has made new highs. It took out the high from 220. That high from 220 now becomes support. But notice how strung out this market is. You got single prints on the bottom. Half back was a very questionable low. Very thin. The market's now gone up and taken out the highest rally high or recovery high we've had since the December low. Market continues to trade higher, very thin, very strung out. See E period again. So the market continues to one time frame higher. Notice we said that the high from 220 now remains support. It's not huge support, but the market was really strong. The market will, breaking into new highs, it will stay above the high of the 20th and really show us some upward range extension. Okay, we've come back down into that range. Market continues to one time frame higher, but we broke into new high ground, but there was no real rally to the upside. You got a few ticks which took on the short covering, hit the stops, and came back below it. You can see the traders have continued to push it back up again, more range extension. The market is spread out more than it was. Now, when you see a market stretched out like this, very thin, multiple quasi distributions, the odds of a liquidating break become very large. Remember, when I'm making it here, that we are probably seeing short-term traders and probably very late momentum traders, not supported by longer-term buyers. All right, so we've come back in a second time or so into the previous all-time recovery high. And I said that since December. We now have matching E and F lows. Again, a sign of very mechanical trading. E, F, and G. Now, G has taken out E and F. Well back into the area of 220. The next support level would be the overnight high, which, as we said earlier, was also the high from 220 that had any double prints to it. Okay, so G period has stopped the market from one time framing higher. The chances are that this is not a trend day. Trend days usually don't stop one time framing that soon. It could be, but the chances are low. Okay, some additional extension to the downside. A lot of chop continues. Okay, you see we're changing another time period. Okay, so H is taking out G by a single tick. Okay, so the market's broken down, it's broken down, and it did trade below the overnight high. So again, we see we don't have any real strength. We had chop early on, but value is higher, and the market's following the recent trends. It's just very logical that the market will go with the trends unless there is something that comes along that stops it. But this is a overall weak market. Yes, it's higher, and yes, value is higher, but we're not one time framing. We're not showing a lot of easy momentum to the upside, showing hard momentum. And then we've come down the last two times periods, G and H, we've one time frame lower. So we're playing this at 40 times normal speed.
30 times right now.
I'm sorry, 30 times the normal speed. Because what we really want to show you, we want to show you a liquidating break that's coming up later. But understand the type of trading that you've seen in the morning greatly increases the odds that a liquidation break can occur. Now, what is a liquidation break? It's nothing more than very short-term inventory getting too long. It happens all the time. There's just in session traders, they just want to buy because that's where the market's going. But when you look at this and you say, this isn't very strong, and there's a lot of chop to it, this is the kind of situation that can set up a liquidating break. And it's just a question where that very short-term daytime frame inventory gets too long, and then you get a panic sell. This used to happen on the floors all the time. The biggest trader in the crowd would very often notice that the short-term traders had all gotten too long. They're all following each other. And all of a sudden, the biggest trader in the floor would stand up and he'd just put his palms out, which means selling. All the small traders would be forced to liquidate. Once the liquidation was over, the bigger trader would come back in and he would start buying inventory and the market would trade higher. And that same thing can happen here. A lot of these traders that trade on very short-term basis, they come from the floor, or they're savvy about what happens and how traders get themselves too long. All right, now let's stop for a second. There was the liquidation break that we've been talking about. Okay, you just saw it happen. Now, at the time it happens, you don't know if the market's going lower. You don't know if that's the start of a big break, or you don't know if it's just a liquidation break. And it's very often you will see short-term traders get caught up in this and chase price down when that's all it was. If you're not clear what's going on, step aside. All right, let's go ahead and play. Let's keep an eye on the high from Thursday, the 221 high. Okay, now notice, stop again. There's the liquidation break we've been talking about. The market went down to the high from Thursday, and it looked 2 ticks below that high. What is going to happen? What generally happens in a case like this? The short-term traders that were frantically buying to the long side in the morning, now these same traders, when they see a break like this, they probably are going to now start selling all rallies. So now we've got to watch what happens when they sell all rallies. What are they getting? Are they getting themselves trapped? Did they get trapped by this liquidation? Get themselves short, and all of a sudden the market goes back up? Remember, value is clearly higher, and we are at new recovery highs. Okay, let's go ahead and play out. Keep focusing on the high from Thursday. See how many times the market's gone down there? What do you think the odds are that the short-term traders have gotten themselves too short? There they go again. What are they doing? They're selling all of these little rallies. What are they getting for that? They're getting nothing. Look at that. They can't get back into Thursday's range. L period is just a single tick above Thursday's high, but it's still there. This is the trap. This was a liquidating break, and you saw the traders get themselves trapped on the short side. They went from too long in the morning to too short in the afternoon. Very short-term traders. And what you're going to see is this market's going to work its way higher for the remainder of the session. So you saw a liquidating break. Let's cover the market was choppy in the morning. It wasn't a strong market, a lot of mechanical references, but overall value was higher. Remember, value is a great filter for what's really going on underneath the market. Market made new highs, but no real strong follow through. The market got too long. If it got too long, you got a liquidating break. On that liquidating break, a lot of those early longs had to get out of their trades, but then a lot of them got trapped because they went from being too long to being too short. You saw them selling every rally. You saw the numbers of times the market tried to get back into Thursday's range. This is the kind of day that will really kill a short-term trader. All right, that's the liquidation break we wanted you to see. As we get near the close, the market is all the way back up near the highs, and the chances are that we will, see those highs before the MN runoff period. Still a lot of chop in the market, but you saw the recovery from the liquidating break, and you see this market. They had the shorts caught. People are just going with the momentum. Okay, we don't need to see the remainder of the day. Wanted you to get some idea of what a liquidating break looks like that is recaptured in the same day. Overall, the market was weak from the opening, which gave you a good idea. The chances of a liquidating break were high. Value was higher. With value higher, it takes a lot to turn the trade around. You can get liquidation, but it takes a lot to turn it to the downside, and it didn't do it. All right, this ends the portion that we have in the course on nuances on liquidation, but it just takes you a little further in understanding the nuances and those things that can make trading very difficult as well as very exciting.